Hello, everybody. My name is Peter Mitchell. I am the managing partner of Kingsgate Capital Partners, and I'm joined today by Tim Archibald, who is general manager of Australia and New Zealand for IIF, which stands for Invest in Your Farmer, and Graeme Bibby, CIO of Partners Wealth Group and an advisory board member of Kingsgate Capital Partners. Before I get started and hand it over to Graeme and Tim, I just want to quickly say a few words about IIF, and another name you'll hear during the podcast is a firm called Spatium. Perhaps more specifically, it is the Spatium and IIF Agricultural Infrastructure Fund, which will again give you more details. But more importantly as well was the Kingsgate partnership. So why are we partnering with IIF and Spatium? We, in our research of the agricultural space, have found this strategy to be one of the most unique and interesting strategies we have ever seen in this space. Let alone having the good fortune to work with individuals with the depth of experience in the agricultural space, which, as we all know, regardless of what side of the farm gate you are on, whether you are a farmer or whether you are an investor, I think we can all agree that both of those individuals have endured disproportionate risks. What we found really exciting and incredibly innovative was the solution that the IIF and Spatium teams have come together to build, which is a world-first strategy built on unique share farming agreements and deep partnerships with farmers. Almost immediately, the fund becomes one of the most diversified agricultural investors in Australia, and uniquely does this without owning any land. So to that point, why don't I hand it over to Graeme to begin the podcast? Over to you, Graeme and Tim.
Thank you, Pete. And Tim, nice to meet you virtually today. Really interested on learning more about the IIF and Spatium platform in particular. Can you talk about what the Co-op platform is and how you joint venture with Spatium and how that all works together?
Yeah, sure, Graeme, and great to meet you, and thanks for having me on today. As Peter said, IIF, or Invest in Your Farmer, was founded in 2021 by Nathan McPhee, out of the concept of, how do we invest into land? And, it started off with the concept of, okay, you've got to go buy a farm. Okay, that takes a lot of money. If you don't have the money, what's the next sort of investment strategy that you can take? And he built out what is now the IIF platform, or what we call our co-op. It is a co-op, which allows individual investors to connect with farmers across Australia. It allows them to build a diversified agricultural investment portfolio, but also share that risk with the farmer. I mean, farming in itself is inherently risky to the farmer and to the investor. For years, centuries, generations, farmers have endured flood, fires, locust plagues, pest, disease, all kinds of challenges. And I suppose our platform embraces that and allows an investor to build out a diversified portfolio and grow their own farm. Farm in a pocket is what we call it, without owning any land, as Peter said. The co-op itself, we put offers up there for members to go in and buy. They can buy a lamb, they can buy a cow, they can buy a dozen oysters, they can buy a hectare of canola. They can build out a range of commodities that they want. As that's grown, that did start off for individual investors. It started smaller. It's now been running, as I said, since 2021. And we've recently partnered with Spatium Capital to bring that offer to wholesale investors, allowing them to come in and get exposure to this asset class, get exposure to the same cows, the same lambs, the same canola, the same wheat, the same oysters, the same mussels, watermelons, whatever products we want to produce out of Australia. Our role at IIF is to go and partner with farmers, growing farmers that need access to capital to expand their operations. And we then raise that money either through the co-op originally, which we've raised. We've deployed nearly $20 million over the life of IIF, and we're obviously now looking to continue to grow and scale that up through the wholesale fund, which is our partnership with Spatium. The difference being that we want to have a portfolio approach to our wholesale investors, where we go and use that, I suppose, the diversification in Australian agriculture to build out a portfolio for investors and minimise some of those risks.
That's really interesting, and it sounds like share farming's been sort of around for a while, and this is just a different way of addressing it. And it's really also interesting how most people look at agriculture, with the land component. What proportion of share farming returns, and how they calculated based on only production costs, given that they don't include land value, and how do these compare against owning farmland outright?
Yeah, it's a great question, Graeme, and you're right. This is share farming in a digital age. It's not a new concept. It's been around for generations. Typically, operating capital could see a farm return 10 to 30%, even higher, when all the seasonal conditions are right. If you don't have that land value in that cost base. Once you add the land value into the total value of a farm, you're looking at 2 to 5%, maybe 6-7% on a really good season. And then that doesn't take into account the years that conditions aren't correct and we have a tough year. So, just on the operating, a seasonal investment, buy your seed, buy your fertilizer, buy your apple orchard, harvest that, whatever those seasonal costs might be. The return on that is typically between 10 and 30% versus, bring in the land and it comes to 2 to 5%.
Yeah, so that sort of addresses sort of one of the components of the offer. So the other part is, it is a season, I guess, that you invest in, and you've got traditional sort of weather, commodity pricing risk. How do you manage that in a portfolio? How do you keep the volatility of the fund low?
Yeah, it's very hard to mitigate weather in itself. If it rains, it rains. If it doesn't rain, it doesn't rain. But what we try and do is we embrace them. So we build out a diversified portfolio. And the best way to sort of explain that is, we all understand what rain and what good rain can do to crops. It helps our plants grow, helps drive up cattle prices, and that can be a great outcome. The opposite of that is that rain has to go through the river system, and that river system then either gets diluted, gets filled with muck. It actually can devalue the value of some of our aquaculture trades. We might not get access. We've had some recent floods on the east coast here, and that has meant that our oyster farmers haven't been able to get onto the river to harvest oysters, which has meant the value of that crop has gone down. So by investing in both of those, we get a medium, a reasonable yield and a reasonable return for investors by offsetting the risk of each individual commodity, each individual region, and allows us to build out a diversified portfolio to help mitigate some of those risks that you mentioned.
Yeah, and that's also interesting how it sort of then comes together with what it means for the portfolio overall.
Yeah, if you look at it just from an individual investment into a single commodity, it makes it very hard to get a return. You might have 10% one year, 3% the next year, small loss, 20% the next year, and it's the volatility, really, not the lack of profitability in farming that's a challenge. It's the volatility, the ups and downs, the good seasons, the bad seasons. Our portfolio approach and our approach to farming and share farming allows investors to spread their risk across all those. So one year will be 10% here, 20%, the next year it's around, down, up, and over a season, multiple seasons, multiple regions, it smooths out that return.
I guess the other part of building a portfolio is how you select the individual investments, in particular, the farmers who are operating. And how do you do that? How do you make sure that they're aligned to the outcome that you want to build for the portfolio?
It's great question again, and we partner with farmers not in the whole of their crop. So the main risk mitigant we have there, or the main way we identify farmers, is by saying you've got 20,000 hectares worth of grain. We're going to go in for 5,000 of those hectares. We then take an approach to review their whole crop and their whole season, and we allow them, they get the profit on the 15,000 hectares in that instance, or the 75%. We'll go up to 50%, but no more. And then say in that instance, the 25% share that we've got, we might make, we might make 30% on that. Half of that profit will go to the farmer, and then the 40% of that profit will then come back to the investor, and 10% will go to the fund. But effectively, we're aligned on the outcome of that season across their whole farm, across their whole crop. Same for cattle, for instance. They might have a mob of 200 steers that we're going to go from a weight of 250 kilos. We want to get them up to 450 kilos. That weight gain over 9-12 months, the 200 mob, the 100, they'll take 100% profit, the farmer will. And then on the other 100, let's say we make, $1,000, $100, whatever it might be, we will share the profits in that with that farmer. So we're aligned on an outcome across their whole crop or their whole herd.
Yeah, excellent, Tim. So I guess the sort of final question in concluding, why now? What's interesting about this opportunity in the current environment?
Yeah, look, many challenges with farming, as I'm sure many of your listeners will be aware of. Land values, distance, expertise, understanding, as Peter alluded to at the start, very hard to get into farming. And many of these risks are becoming more and more volatile, including the risk of land. Land values may decline. This allows investors to invest into the production. Australian agriculture is worth over $100 billion a year annually in just the production value, excluding land altogether. So our fund here allows investors to get a piece of that, and that $100 billion is going to grow each year and continue to expand. And it's helping us, focus on food security in Australia, and it's allowing investors to, get their hands on, I suppose, some agricultural assets that are uncorrelated to the share market and to what's going on around the world at the moment.
Yeah, excellent. So I think overall, thanks, Tim, for those great insights. And what I found really interesting is that you can get access to a very diversified portfolio. You're doing the selection of farming, and the farmers, that industry really well, and you avoid what can be a prohibitive dilution on the return by the land costs. So you're avoiding the land costs there. So yeah, really interesting overall. And thank you today for that, and thank you to Pete. So for all our listeners, if you want to find out more about IIF and Spatium in this fund, please get in contact with the Kingsgate Capital Partners team. Thanks for listening to 5 by the Fire.
Thanks, Graeme. Thanks, Tim. Appreciate it. Thanks for your time.